Happy Friday, traders, and welcome to the end of the trading week. Look, it has been quite an eventful week in markets. Quite a lot's been going on, and we've seen some meaningful moves, and probably the most meaningful move and the market that traders are focused on the most is obviously crude oil. Beginning of July, we started crude just sub $70. We saw the lows since the war started down around $68, and now we are back trading at $80. Most of those gains, up pretty much 15% from those lows, have been made this week. And obviously that is due to the geopolitical tensions between the US and Iran. The US has been bombing military sites in Iran for the last 5 days straight. They have also reimposed the naval blockade on Iran, so any boats going in or out of Iran. So basically what the US is trying to do is they're trying to weaken Iran militarily and also economically, trying to strangle their economy to try to force Iran into a deal. Is there any guarantees of that happening? Iran has been super stubborn, so no, there is no guarantees that this will work. And Trump, look, he certainly is getting very impatient with what's going on, and he is talking about now potentially bombing basically Iran's infrastructure. So that would actually escalate matters again. Iran has responded as well. Like, this is a red line for them, that if the US did bomb the infrastructure, they would set the Gulf states' oil fields on fire. And then also they have friends at the Red Sea, the Houthis in Yemen, and they are talking about closing the strait there, which also is a big, important strait for crude oil supply. Another 20% of crude flows through that. So, look, if this did escalate to that sort of stage, don't worry about crude at $80. Don't worry about it at $100, or even the highs of 120 that we've seen so far during this war. Crude will absolutely skyrocket, potentially go and retest those record highs at 150. So, look, that is something that traders really need to be aware of, that this is a possibility. And if we look at it, we've got the weekend coming up, we've got gap risk, yes. And yes, crude did gap open higher last Monday. But look, we do have the World Cup final in the US. Trump is actually going to attend that. So look, I think that the escalation, if it occurs, probably won't occur this weekend, possibly after the World Cup final. And so that coincides with the start of the trading week next week. But in any case, short-term crude targets, at the moment, in the last couple of days, we've been trading a range of around about $78 up to $81. I basically advise buying those dips down to $78. And if we do break 81, look, next stop probably is around about 85. That's probably a realistic target in the short term. And breaking that obviously opens up that psychological $90 level. But in any case, certainly would not be fading this move, and certainly would not be going short crude into the weekend with obviously gap risk, etc. And I imagine a lot of traders probably would be squaring up positions or going along into the weekend. So moving along, the other big meaningful thing that this week we heard quite a bit from Kevin Warsh, who is the new Fed chair. The two key takeaways from him was, one is that, look, he said that the Fed, basically the number one job is inflation, and that they would do the job of inflation. So obviously hawkish there. But the other thing that he mentioned is that the Fed's balance sheet is too big, and that they would probably look to start reducing the Fed's balance sheet. So when they do that, basically what the Fed does is that instead of buying bonds, they sell bonds. And selling bonds is a form of what is called QT, quantitative tightening. So when the Fed engages in that, it is a form of monetary policy tightening without actually having to raise interest rates. So if you are wondering why gold got smashed overnight and it is below 4,000, there's your answer. Certainly the new Fed chair and the Fed is not a friend of gold. So gold did close, yes, below 4,000. It's been trading above and below for the last week. Got a bit of a reprieve on the weaker than expected CPI data, but obviously with those Fed comments about QT, we've seen gold lower. The key support there is the levels that we've been bouncing off, and that's that 39.50 support level. We have bounced a few times off there, bounced as high as 4,100. We break that 39.50, 100%. There's going to be stop losses sitting below there from traders. And I'd imagine in the short term, look, we probably will have a quick trip down to 3,900. But look, the outlook for gold at the moment, certainly it is still struggling. So selling rallies there has been working, and certainly that is the bias still moving forward. How low can we go? Some of the longer term targets potentially down towards 38, 3,700. So still the bears have got some room on the downside before we start seeing levels that potentially you may want to get some long-term buying. And for silver as well, look, it's trading around $55. Down towards 50 or a break of 50 is probably the levels maybe you want to get into for longer-term trades. Other than that, look, this on Friday, there really isn't too much in the way of economic data or event risk. So potentially market may go into the weekend trading touch on the quiet side, but I imagine at the moment it seems, again, all eyes on crude. We're all crude traders, so look, if crude does rally into the close on Friday, that is going to weigh on risk, and we may finish off the week with some risk off trading. In any case, good luck with your trades. Have a great weekend, and we'll check back in next week.